Rock and roll. Okay, take a quick look here. Okay, so take a look here, what we have going on. I posted on the Day Trader Speculator website Friday's webinar. It was done between 4 and 6 in the morning. Stock market here opens up at 6:30. So this was after Tom Keene's surveillance show on Bloomberg. I watched that. I get at least 2 hours to myself a day, right? Mine. So that was Friday's webinar, and I think at the time S&Ps were down 2. I posted an Apple chart, or this is the S&P chart here, just to give you a view of where we're at from the beginning of the year. Where are we at here? So from the beginning of the year, okay, so the first rate hike, reaction to it, the beginning of the year, the March forward, what am I looking at? I'm looking at the December S&P contract, okay. So we have December contract, okay, S&Ps for this year. So this is the last of a year ago when the contract came up, and this was the beginning of the year. So if you bought the December contract in January, February is the bottom, you rolled it up for 1,800, 300 points. And that was my Muppet guys laughing somewhere down in here is a buy. All right, so it marched on forward. Through here is basically the commodity markets in my eyes. We're beginning to get a bounce. It's just a bounce in a secular bear market, I believe. And then I have Brexit. We have Brexit here. Brexit came down, scooped up the stops for those who raised their stops, but the stop went forward. This is when I began to say I'm getting off the boat here. I've had enough for now, and I wouldn't mind buying equities on a discount. My bias right now is correction, which is between 10 and 20%. Or actually, yes, right? Correction. Consolidation is between 0 and 10%. So I think that equities are going to fall, indexes are going to fall between 10 and 20%. Individuals, I expect them to fall further, but one day does not make a trend. This is a daily. And we also have the rollover too. So you have a lot of people who are doing the arbitrage. They're getting out. A lot of that is what I think is going on now. So in this, I have to give this action, Friday's action, a few more days here. And then basically the contract is going to be off the board the following week here. September 10th is where we're at right now. So the 16th. Okay, so basically we have here, we're at the kind of the top of the Brexit. So basically we're just retesting the Brexit. Now in my long-term stance, I think the S&P is going to head to, let's see, the S&P is going to head to, we'll just say 4,800. We'll just make it around 5,000, okay? By the peak of the next real estate cycle, if everything goes, my path is that we'll have an inflationary period because of baby boomers passing on their wealth. So we're going to have indiscriminate spending going on by the transfer of wealth. Hopefully they'll be putting their money in trusts, baby boomers, and the kids won't go bonkers, but whatever. All right, so this is the S&P for right now, my view on it. The other chart I have here is I actually posted a bigger chart for people to put their little lines on earlier today. All right, this is a quarterly of the S&P. basically have, I just drew a line through the open and closes on some of these bars as a neckline. So it comes down to 2050 on the S&P cash index. Okay, so 2050. So from Friday's action, I'll play down to 2050. Okay, if you noticed, the futures continue to slide. I haven't looked at S&P after or SPY after hours, but we'll go through there in a moment or two here. Yes, I got up at 1 o'clock in the morning. That's what happens when you get up at midnight every day. I'm on West Coast time now in Arizona. I'm right on the Colorado River. So I get up 2 hours before London opens. I trade London. For me, I listen to my Tom Keene show between 2 and 4 in the morning. At 4 in the morning, I do webinars for club members, and then I usually abandon them at around 6:15, and then go do my stuff, and then go from there. Friday, Monday? Okay, until about Wednesday. Things are kind of like on autopilot, but come Thursday and Friday, things kind of, what I do is I go after weekly options for opportunities. Once again, I look at plain options, if you're buying them, as walking into high stakes in a casino, putting $100 in the machine there and pulling the handle once, because you're either going to get it or not, is basically how I look at options. I prefer to sell options. I prefer, if you're long, to write covered calls, like basically what's been going on for the last 3-4 months here. If something's cratering, preferably commodities, because rarely do they go to zero. I like to write puts, naked puts. That allows me to get long. Somebody's actually paying me, which I look at as a buffer to buy in on the quote-unquote falling knife. So what I did here is I just drew some trend lines in here because I haven't figured out how to manually do it by degrees. And so I took the quarterly here, and I went across here, and I just kind of took this, I think it's a gravestone doji. All right, drew that through there and through basically the closes and the opens on this one, and just drew it down. What was interesting, say, Kev, so 7th grade much? I drew this line in from here to through this one, Friday's close. Look, it gives me this 90-degree deal. I think it's 90 degrees. So it gives me the 90-degree deal. I went, oh, that's kind of cool. And then I tried to match this one up with this one, but I just drew it here. Now, I posted on the 20th of June pre-Brexit that you guys are on your own. For the 40 years I've been following markets, yeah, I'm not 50 yet, but the 40 years I've been following markets, standing on the tallest mountain and screaming to the masses, it's deaf ears, as they say. I make my attempt anyway. Hey, the road less traveled, here's your road, so I drew another line kind of parallel this if we get follow through. Why do I say follow through? Because when I go back to, now I'm just taking the S&P, okay, for example here, all right? Here's where the close is, right? So basically we kind of poked our little nose through here, and this was the close, and this is for quarterly. So this, if we go below 2100, that should be the first set of alarms. I'm going to assume that we're close enough to it that we poke at it. We've had a bunch of sideways, so we need to break out one way or the other. You can also have a break jab, which is what I think we had go on here, is we jab the highs and then we're going to roll on over. We were back to the 2250 is where I just drew the line across, or excuse me, 2050, 50. Okay, so drew a line, which is, lo and behold, it's a pivot for next year. This is the pivots, and R1, R2 here on the quarterly will be adjusted as the rest of the year goes on, kind of thing here, okay? Basically, you can have an alarm set at 2200 on the S&P. If it goes back to 2200, you want to be long. And I'm going to assume then we're going to go back to 2400. That, when I told everybody that the last 10%, okay, you guys are on your own. Okay, that to me, all right, I already have from 683 all the way up to the 2200 mark, okay? So to 2400, and that was what I stretched for this year. We're going to have something happen. And the only way that it's really going to happen is if the people go out and do the spending and add to the GDP, because right now what I'm seeing is we have, I think we're having a shock to the system about the whole interest rate deal again. Now, the interest rates have been moving up, but remember that everything is efficient, just in time interest rates. You have the low interest rate deal, everybody adjusts their books. I wonder how many corporations pay the man extra because their cost of carry is lower. God bless them. All right, so hey, I got a bigger bonus. Why is that? Well, all the coal that we use for making blank, we have to put in store and carry. That cost has dropped, and the price of coal. Well, they don't get that one, but future contracts they do. That one they have a loss. They have the coal and it's losing. They'll still get the number of BTUs out of it, but if by chance they end up with, whatever, their asset is declining. We won't go into an accounting right now. I don't play one on TV either. All right, so here we are again on the S&Ps. Basically, we'll say the pivot is a line through here. Okay, what I'm pointing out is at some point here, the plug is going to have to be pulled on some people. They're whatever. They come running in, they come running out. Is this a buying opportunity on this dip? Well, my bias right now, short term, which let's clarify the short term type of thing. First off, I'm hedged through May. Okay, so at the long end of my little plan here, I'm hedged through May. I'm looking for the pain to be mostly done by November if this continues on. And I will say if this breaks the 2050 level, then I will say that there's a little more to it. In candlesticks, you have to give it a little bit of time. All right, you can take the Brexit low, or I guess this is a January low, or first quarter low, and the high, and it may just end up being sideways. We may be stuck between 1900 and 2050, so 150 points. Okay, I know we chewed up 50 on Friday, but the deal is you have to have the follow through. So the first alarm for me is 2050. At that point, you're going to start getting specs involved. Okay, this is how this works. Everybody's a genius on the way up. Okay, bullish. People are naturally born positive, happy creatures. Okay, so if they grasp the thing of compound interest and whatever, they just go to work and exchange their labor, their brain power for capital, for cash, and then they would invest. Okay, that's what we've been trying to do for a while here, so we can get everybody, wean them off of Social Security because the rich don't want to pay. All right, so bastards. I don't know. Let's just talk about the wealthy. You're not going to miss it, right? So you have 40 billion, now it's 39. Whatever. No, okay. It doesn't exist anyway. All right. So, okay. So the two schools of thought here. Set an alarm for the 2200 one on a breakout. Could this be a one-day event? Sure. But am I going to say that we're going to be the one? I don't think so, just due to the fact a lot of the other charts they topped out in 13, 14, and 15. The retail thing is doing the counter cycle. It should have been lower in August, and some of these are rolling over. So what I'm seeing there is I'm guessing that some of these marginal retailers, which after restaurants are the number one failure is retail, and it's 70% of the economy, which is consumption. Hence, forebodes that the retailing deal. We recently lost Hastings, which is just a knick-knack store with videos and books and whatever. A B. Dalton. Yes, glorified B. Are they still in business? Whatever. Okay, so cost of carry, right? You have a store full of stuff. You have to go to the bank. You get the money. You buy all the stuff. You put it in the deal, and it doesn't work out because everybody goes to Amazon. So just like our little island town here, if we spend $20 million a day, it'll shift around. Does this restaurant get it? Does this store get it? all of a sudden you're exporting money to Amazon in California or wherever. That money leaves. Okay, so we lost our Hastings due to Amazon, and now you have the cost to carry for soft line and hard line goods. So if you're marginal now and in your carry costs for the merchandise going up, we're going to lose some of these retailers, which is fine. I remember 1980 in Aberdeen, South Dakota, it was a Tempo. And then, of course, Carson, Peary, Scott, Donaldson's, Montgomery, just throwing Sears and Walmart. And I'm going to say Amazon too, right? Because of the original Sears was a catalog, right? So he didn't have warehouses. He shipped it by train. I think it was pocket watches, right? Train watches, yeah. Da-da, and that's how Sears started. Okay. So back on track. Happy Saturday, everybody. All right, so the alarm here is at 50 points. 2,200 on the upper end and 2,050 on the lower end. If it goes below 2,050, you definitely want to have a very short-term bias on here to the downside, now let's say through September. Now you begin to start taking out 2,000 to 1,900. Then all of a sudden, you want to start looking at things that have been beaten up in the last 3 years as possible buys, because of this too shall pass. Even if I think that the S&Ps are going to fall to 1,100 or 1,600, okay, in a quick swoon, I still think it's going to, it'll still continue. Triple, we'll say triple. What is that? 16 times 3 is 8. The one 4,800. Even if the S&P drops to 1,600, I'll expect it to be at 4,800 by 2024 for the year. That should be the peak of the real estate cycle, but we don't need to go into that now. Not many of you plan 10, 20, 30 years out. All right, other charts that I have on here, looked at that one, and so we'll go to Apple real quick here. All right, Apple, as you're well aware, I posted that I thought it would go to 67. Some of you that are been around a little bit longer, I know that I threw one out back in 15 that I thought it would go to 46. I think there's, if you dig deep enough, 46, 47, 48, they're hidden out there for this year. All right, so how do I look at this? Apple jumped the shark up in here. Those of you that followed me then, short. All right. Then the cover was at 97. It opened up, it gapped below 97. You covered your short at 94, and it ran all the way back up. All right. So now here we are again. We have basically a sideways action here, sideways action up on top. Went up to 111, came back down. We had a gap on earnings, which resulted also at a time when there was underlying people were out of it in the short term. They were the gap. That was a sweet. You gotta love those, right? Kind of like 50-cent options that turn into $5 options in one day. Oh yes, that's why Friday's a busy day for me, because I'll have a lot of. I haven't found the little cheater yet that says if you make 900% in 48 hours, get me out. I'm my first and only computer science class was in 77. Okay, so rock and roll. All right, so here we are with the Apple. I look at this as a distribution pattern after the high or the peak in Apple. Let's go back to just some simple things here. 1970s Steelers, okay, Super Bowl deal. 1980s 49ers, right? So take Apple as a number one company market cap, right? How many years do they go as number one? 1, 2, 3, they string them together, Exxon, IBM, I don't know, General Electric, blah, but they falter. So something else is going to pick up the slack, and it's going to be Google. All right, so Apple here, okay, so it's lost its momentum to the upside. People don't usually wait around for 2 years for losses. You have Warren Buffett, Jimmy Yeah, let's see here. Where am I? Okay, bangity bang. Okay, cool, rock and roll. All right. Where am I? Back to my charts. Okay, so, all right, so Apple. Okay, so Apple, it does its little deal. It becomes the number one stock. And their earnings, things begin to wane. I believe it was either this one or somewhere back. Apple earned like $14 on all those buybacks. So they're taking all that money and buying back the stock and making the amount of stock outstanding smaller, right? So if they can just have everybody replace their phone every 2 years, everything should be the same, right? In marketing, there's 4 phases to a product you have. It's there's a life cycle. I look at Apple as just like the Walkman of the 80s. Everybody had the Walkman, then the knockoff, and then that was the end. Nobody bought the Discman. Do I like Apple? You betcha. Back in 78, right? Back in when I was in grade school. Look, it's an Apple, whatever, is it 2C2, an Apple II. I think we had an Apple II, GS. I had the knockoff C5, all of it done. There's no need to convince me about Apple. You're 30 years too late. Okay, so now when you're number one as a company, you can only go down. So Apple, in my eyes, can only go down one. It's done its thing. It can pull out any miracle that it wants. It can get into banking. It can get into airplanes. It doesn't make any difference. In my eyes, it's over with. It's dead money. All right. So Apple now did the whole deal here. It's sideways distribution. This sideways distribution is similar to the 2007 distribution in the stock market, where it peaked, came back down, and basically traded sideways on deaf ears, and then it just rolled over pretty good. All right, so Apple, once it loses whatever, 90 here, whatever, it's going to just come down. Why Warren Buffett is, hopefully he's out of the thing. At one time he said he wouldn't buy tech. One day I'll be an 85-year-old man, and I'm not sure, but I see a lot of these old men who've been, their entire life, and then it comes down to their last thing, and it just blows up in their face. Who's the last? The Chipotle guy that also does Ackman. I'm not sure. Whatever. I mean, it's not, dude. It's like with me. If I get 3 losers in a row, I'm clicking 4x. You go into one, it's like, all right, I slap my hand, and then of course the revenge trade things to how dare you, and you go and close both eyes and slash at it again, and you get whacked. Wisdom is the part to know that you want to be on the other side. There's a saying as floor traders is you buy the first dip, you bought the second dip, you made the third dip. All right, so the Apple thing, more than likely what they'll probably do is they'll talk up some sort of holiday season. They're going to have to talk up the holiday season. Retailers are rolling over. Maybe it's an opportunity to buy, but for all I know, the money is moving from out of the commodity cycle, which peaked years ago, right? So by now we've already shifted the boat, right? We're done investing there, and we need to do some sort of, you hear about it, there's no capital improvement, they're not applying money. At the end of the day, after we're done flipping some fictitious piece of paper that nobody ever gets and puts on their wall, after we're done flipping, it's still a business, right? Okay, so Apple, this is how I see it. If it comes down to here, naturally they're going to see the ebb and flow. They're not going to want to chase after it. It's also in the indexes. It's also used in baskets. It's also whatever. Apple is a fiat currency in my eyes. Same thing. It's a piece. Exchange one for $10,000 worth of Apple and $10,000 worth of GLD. Same thing, right? Okay. Apple come down to here. It'll probably pause and it'll slide. And then this is why I said around 67. Besides this little line, hey, I believe in little lines too, right? But in my eyes, I can't see anything. People have been in my face about it. Hey, the more people that are in my face, the bigger the dinghy, right? I get a bigger boat. All right, so that's how it works, right? Okay, so that was on Apple, and then I think I have one more here on the Apple itself. All right, we're going back to here. The point and figure chart I posted before in 15, run to the hills kind of thing. How this is this is the volume on the sides, the volume on the side, and the volume on the side. All right. This is supply. We're the number of stock traded at what price. Okay. So this is like your market profile. The CME has an awesome handbook on it. And Cav. Open up the CME handbook, right? PDF, bam. You'll love it. 300 pages of fun and games. All right, so that's that. That's our handbook, right? Thank you, Stottlemyre. Copy, go into your little software. I'm learning this stuff here. You hit your software, you go into chat, you tell everybody, hey, here's the link, paste. You paste it, my God. You solve that problem. All right, so running back, return to my meeting. Need pieces. All right. Okay, market profile. Good. I won't go into it now. I suppose I could if I need to fill time. So here's Apple. Overhead supply, the bell curve. If any of you passed statistics, haven't been there yet. I'm still going to college. Been doing it for 4 decades. One of these days I'll get an AA. All right, so all right. One thing remains the same about college. Oh yeah. All right. Okay, overhead supply. I don't think this will be hit. Maybe on a nasty short covering rally, but there's just too much stock. There's like 6 billion shares outstanding. There's some ungodly number. I'm not interested. Here's the supply for right now. This little line in the sand here, 108. So this is your long short kind of thing for short term. The computer here kicked out. I'm using an ATR, whatever. Average trading range. It's doing all this for me. I just needed more time, and this is a better looking chart. The little computer says it's going to go to 121.36. That's fine. This is what I hate about little things that tell you what to do. Besides Kevin. Kevin's correct all the time. All right, majority will say don't blow. All right, so here's your supply. It'll come down to here. These are my targets: 94, which was that gap down open, and 91, which was the low kind of thing. If there's going to be some support, it'll be on these numbers. Okay, loosely using support. All right, I will say that that's a pause before going down further, because now remember what's going on here. Okay, last year, May of 2015, I didn't like what I saw in the market, and I took 4 months worth of crap. And then on that Monday when we swooned 1,000 points, I'm all like, I filled up 2 shopping carts today, and that was the tweets are gone forever, just buried in the I told you so's, right? All right, so here we are, the same thing again. Was it June? So it was 4 months, so June, okay, July, August, September, October, okay, and then November. All right, so it's basically the same principle again. Yes, this would be an area where price has memory. Okay. 94 was support, 91 was support. But when she kicks down to 88, 89, it's a fresh one, and it's headed lower. Okay. But remember that I was on top of this stuff. A lot of other people were on top of this stuff. We have our first deal. Part of the people are going to say it's a dip. They'll talk about the rosy economy, just like with the raising of the front end and interest rates. Hey, we're only raising interest rates because of the economy's, whatever story. I don't care. As you see on this chart here, it doesn't list a story. It doesn't even list price or time. It just lists price. That's all I want to know. And Apple has been making a series of lower highs. Now you make a new low, that's going to take out a lot. Everybody that's been buying Apple. I'm assuming that there's nobody left who bought in, what is it, 122 area or something. Those people they're gone. This is a first round of selling. Here's another round of selling. So anybody who's been buying Apple since the beginning of the year, once it loses 90, everybody who bought this year is going to be underwater, right? So they're going to have to pitch, forcing it to go lower. And I don't think this is going to hold. Yeah, I called it support, but I'm going to call it a pause. People that are going to pile on into Apple on a short side, maybe 97. Is that about 97 there? Yeah, 97.60. So somewhere between 90 to 94, there should be a quote unquote pause where people take their shorts. Okay, but the other guys they're going to pile onto any bounce on here. Okay, and then I'm speaking as a floor trader, right? Okay, remember my bias is negative right now, right? I want to see and I want them to come down so I can buy them cheaper. I'm way past shorting this thing. I'm now looking for where do I want to buy this stuff, and is this the stuff I want to buy? Maybe I want to buy European banks, right? Because you go find the stuff that's beat all the shit that hopefully will make it another 100 years or whatever. And that's what I want to buy, where they indiscriminately just throw crap out just because, All right, so getting back to the stuff, here's Friday's webinar I did for a couple hours. I'll do one on Sunday. I put it down for between 2 and 6. Now, I only did that. My deal is I don't mind blabbing. My deal is the PUDs that come in and go, I don't hear anything. Well, maybe I need to go and use the loo or get another iced tea, just fly a kite, But those are the people who don't wait for nice price entries and stuff. They usually disappear. All right, so we got through the Apple, we got through this. Okay, so let's go through this. Now, what I did here was the anything KBW. All right, so, and I sorted it, I don't know, whatever. Okay, so because there's a bank index on here too, and this one's REITs, okay. So the market will be telling you signs here, like the REITs, I think by law I have to give back 90% of the profit, all right. So any rise in interest rates, that would go and affect the bottom line because how many people pay in cash in buildings with their buildings. Donnie Trump, of course, paid cash with his buildings. He wouldn't be filing bankruptcy all the time, which would be an interesting thing because in theory, all right, now just a quick sidestep here. Donnie Boy, all right, by law, I believe has to put his assets in a blind trust, okay. So he can't tinker around with his stuff, all right, which is fine, okay. So he has to think about, he has a new job now, okay. But if you go back and extrapolate the number of bankruptcies over the time period started, he'll be just like Jimmy Carter. He'll come out and it'll be like, oopsie, the peanut market went awry on us. Yeah, no. So, but it'll be a funny one. Whoever gets in is one and out because we're going to be due a recession. The irony of it, how about this? Well, the irony of Hillary getting in and then being a one and out like George Bush, the senior. Okay, to me, it doesn't make any difference. I'm voting for myself. Whatever. I guess I have to actually send that to the voter people because I might as well put in Mickey Mouse. I'm in Arizona. To me, the last 8 years have been enough of listening to the talking heads in town, like they're going to change anything, whatever. Okay, so back to this here. All right, so all right, so here's the REIT one rolling over. It's actually showing volume on here too, so I can look at it. I follow the unbalanced volume. These are weeklies. I trade by weeklies. If I get something good to go, I already know, it's kind of like a loss. If you guys are going to hold a loss for 3 weeks, you might as well hold a winner for 3 weeks, right? Okay, some of you, as you get older, the patience works out. I started on the floor because of you catch one tick that was 4 times minimum wage. And the spread's already there, bid ask, right? So in my little 19-year-old head, I was like, oh, how do I, they're giving bids and offers all the time. So it's like, I just have to match these guys up. I'm pretty good at that game. All right, learned a lot being on the floor. Holy buckets, did I learn a lot. I'll tell you the stories over time, of course. All right, so interest rates go higher, right? Oh, Kev, you've been talking about that forever. Well, this is how this works. As on the macro level, as interest rates go higher, banks offer more loans because that's how it works. They hand out the money, they put it into the system, the capital part of the equation of labor and entrepreneurial talent, right? So rates are going up, they put more money into the system. Oh gosh, that feeds the issues that we have, but it also solves the issues. Here's one thing I thought about today myself, is the little banana heads, what was it, 6,000 of them over at Wells Fargo, open up all these dummy accounts to what, I didn't read the story, but to what, get $1 commission or something, whatever. Okay, so they created a whole bunch of credit that just didn't go any, whatever. But the thing is now all of a sudden, even if it's $20, they're going to give thousands of people $20 to go and toss into the economy. So I just thought that was kind of interesting. Oh yeah, no, we're not giving the people money because of the economy is slow. Like the 3 checks they gave us under Bush, and I think the one under Clinton. No, under the current guy, Obama. Here's a refund check. We lowered taxes. Here you go spend it. You know, I'm always shocked that they think $400 per person working staff is going to actually move the economy, but with velocity and everything, whatever. Okay, so rolling over here, what do I see? See the belly here, 27.28 on the short side. It should stop at 34. I said about 20%, so it's at 40. 20 is 8, is 32. That comes down to here. That's fine. Even you know, these things are moving, you know, 10 to 20% is how I'm looking at it. You can see these are volume bars, a fat volume bar here, and then basically sideways, and now it's dipped below it. So you're going to have, if anybody's in this one, they're going to start selling. It's lost momentum. But you can see tiny bars up, tiny bars up, tiny bars up. And now they believe. We believe. And big bars off. Ah, what happened? Well, I'm going to say you're a little late. All right. So what's this? Property and casualty, whatever. Mother Nature will probably when nasty things happen, Louisiana, whatever, the Mother Nature, they get to raise rates, and their actuaries, they say, hey, we get to raise rates across the board. You know, people will come in and, you know, they'll get the smoke detector after the house burns down. They also have issues because they have to buy paper and, you know, life insurance kind of thing. What did they offered 40-year or 50-year or 100-year paper for insurance purposes. People want a policy, just buy the bond from the government and just hang on tight, you know. Here, though, these guys, I'm sure a lot of this has been made because a lot of their paper with ZERP and NERP helped their bottom line. It kind of sucks if you're an insurance company and you have to buy debt. You know, you have to have some sort of stream coming in, and they take away your debt. And so you have to keep piling into other debt. And so you have the whole insurance regime in America. You know, and you have some of these fat bars again, fat bar, and all of a sudden now they'll be happy on the new debt they buy because the rates will be higher, but the old stuff, you know, they're going to take it in the shorts for a while. But that one also looks over. This is weekly too, right? Yes, this is shitty volume, but I'm not interested. These things to me to be interested. Oh, what happened here? Mortgage finance. Maybe I should screen my shit, huh, Kev? Whatever, we'll pass on that one. It is interesting to note, though, mortgage and whatever, because the deal is if they raise interest rates, and then on the front end, of course, they have to filter through to the mortgage side, autos and mortgage, that kind of thing. Any type of home builder and stuff, because we're midway through the cycle, but the prices are going higher. The herd should run back into debt short term, even if it's September, October, November, maybe just they run into debt just to hide. I'm not saying T-bills, but they run into something. It's short term. Then you'll get the other people, hopefully, that are smarter, call up and say, hey, I think this is the last time you're going to get a 275 mortgage or whatever. Like I mentioned before, real estate is an 18-year cycle. So if you get a 30-year loan, the man can come after you 2 or 3 times. It's always best to buy something that one person can afford, because that's usually how life goes, right? There's only one of you. Okay, power shares here, blah, 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 whatever. Same thing. Double tap on this one. I'm not interested. I'm trying to find the banking one. Insurance one. That one's moved to whatever. Ooh, this is a nice one. Here's a breakout and reversal. Okay, this is, I call these jabs. I'm not a CMT, but I play one in chat rooms. All right, so, yeah, nice try, Kev. All right, so comes on through, get a full reversal on a week here. If when it comes back in theory, when you have the channel, it usually tests the other end. So this one's going to go from 74 to 62, but it needs follow through. So basically you can just set an alarm on the upper end, because if it comes back through at whatever 75 and change, it'll go to 78. Okay, if this market, the stock market, decides to go higher in relatively short term, the angle of ascent will be it'll sharply increase. I won't show it today, but we're talking like from 95 to 97, 98. Now you can see how it just goes sideways and then just takes off screaming. So this might be similar to that period. That's, in theory, is what it should be. You get out of the commodity thing. You move into technology and back to services. Our economy is 84% service, so it's brain power, basically. Okay, so if this one comes back through, if it loses 72, we'll say on a closing basis, then I think it'll probably go down to 62. So that's $10 on that one. KIE, whatever. I'll save it as a chart. I'll post it as a short. Capital markets, I don't know what happened to that chart. That one, see now, okay, here we go back to this guy here, all right? Capital markets, ETF, whatever, blah, blah, blah. Okay, so here's 2015. Lower high, lower high, lower high. It grunted. Okay, so here you have a deal where if it goes below 32, then I expect it to come all the way full circle back to 2011. Go grab your charts, all right? Last year, when I said on the pullback for the transports, when I was accumulating transports, I said somewhere around 2014 low, right? From 15, this one actually went further. It went into 13. Here you have one that may come back to 11. So if you own anything, I'm going to say your targets for now would be back to, this chart doesn't really show it, but back to, I think it's October 2014 lows. So that's what you want to aim for. And then here you can see it just the next bottom, you know, there's going to be a stop in here, whatever. And that'll be like 87% or so, whatever. You get back into here, what is that, 30? So it goes from 40 to 30 to what, 25%. All right. But what I'm getting at is when you're eyeballing your charts and all of a sudden it's looking like, my God, it's going to go back to a 2-year low or 3-year low or 5-year low. That's probably what it's going to do. If the humans haven't changed. We called it a Great Recession, the Great Depression, 1937, we raised rates. During that time period, stuff was stagnant. The humans were just beat to shit. We took away all their wealth. How can you do anything if they, you know, if you're up to your eyeballs in debt, you don't own the stuff, then the whole dust, it was like a disaster hit us in the country. You know, it was perfect timing though for what was going on. You had the shift to migration out west, but during that time period, everything was slow. Our slow here happens to be the baby boomers who aren't working 5 days a week and kind of, you know, they need to get out of the workforce and let the kids get in there and earn half their pay. So, all right. During that time period in 37, I pointed it out before, they raised interest rates and then they had to drop them and stocks fell, what was it, 50-55% in 4 months. So that's one play I'm looking at. And the other play I'm looking at is Trump guy. He comes in, right? And I have to take him as like a 1968 us getting Nixon. Now, it doesn't have, I'm not saying anything, but I'm just saying that humans do the same thing. I mean, you wake up in the morning and it's a sunny day, usually happy camper. You wake up in the morning and it's a gray overcast day. You might not be a happy camper. You might be in the mood for flatted music, you know, funeral dirges types, and that's your feeling, right? So it's the same thing. Stock market goes up, goes up, goes up. I take the buy the dip crap, whatever, and all of a sudden it's the first day. All right. I mean, we've in this case, this one's been going down since 2015 too. This is a bank index here. Well, this is the one I was looking for. So here in the big old theory world, you can come down here. All right. You go back up. Okay. You can come back down again. All right. So the banking that hit the spot here. Okay, what do they call that? A running flat? What's it? They like an ABC thing again. All right. How I want to do this is as interest rates are rising, it helps out the financials. And then we should be in a housing cycle too, but we have the issue of the overhead of the baby boom. They're going to be dying. They're going to have their homes. The homes either hit the market or get filled with immigrants or whatever. Maybe the kids are already living there with the parents, remember? So that's their only, I lived in the same home as my parents and their parents and their parents. Well, whatever. I guess the baby boomers were actually the first ones to actually leave the household. They just like the Waltons, they all lived together, but we got on the move. You could move to wherever the work was. That's what people do. But a lot of people are hunkered. They have less than a decade left in their home. Yeah, they can sell it, but then they have to buy another one. You get to that age, at age whatever, 50, you don't want to move, unless it's a Happyville. All right, so this one basically to me is I would be a good boy of buying on weakness. What do we have on the downside? So we have the 20% on the 60. I have to treat this as like a running consolidation. One, I don't know how many banks are in this index, but if it's just like the telecom one, this is an oligopoly. So all the profits are split between just a handful of money center banks. I'll look into that a little bit more. But do I think it's going to come back to 32? Will it be cut in half? I don't think so. But like I mentioned before, stocks fell 50% in 4 months. And 1987, if you want to use that one, that was 47% over August, September, October, 3 months, 4 months. So, but it could be just like when we went back to 15, it doesn't show it on here. Some of the ETNs went nuts so down here too. That's when we put our little collars on there, little limits. Holy shit, I got to run my thing a little longer. Yeah, I'm only into the first wave. But here's a reversal here too. It's the follow through. So right now on this KBWB, you have to wait on this one. It's more like a price, what is this, 37, 36, 34, 32, 29, 28, 27. Okay, so you can play it like on the odds. I'm just giving you round numbers. You guys can scale in on your own little system. I'm not, it says options. Not sure if they're fives or ones or whatever, but you could, you could buy it on the odds, 35, 33, 31, 29, 27, that kind of thing. Or when it gets to the next one, put it up here for the chase after it reverses kind of deal. But what are the odds? Do I think that it's going to go below this? If it does, everything, I don't think we're going into a bear market that'll last 9 months or a year and a half. I don't think this is just going to be a short-term thing. This is going to be the part where, like the Brexit type deal. All right. And think about it this way. All right. We're all pros, right? Okay. We just spent months, okay, sideways. All right. The kids have pretty much figured out the buy the dip thing, and the funds, they have time on their side, and it's going to go up. The hedge funds were all, majority, they're all wrong. Okay, they're bullying the markets. You have a thing that we're finally getting some volatility here. So who benefits on Sunday night if the S&Ps move up 30 or 40 points? Okay. Now, how do you take that? To me, I'd fade it. I'd short it. Okay. But if the market gaps and drops again, all of a sudden it's down, 10, 20 points, whatever, gaps. The guys who were all short And the ones who have to put money in, because we've had people leaving this market since February. All right. They can wait. They don't have to post any bids. It depends upon how much money you have, how much you have to put to work, what you're aiming for return. I mean, if you got in January and February this year, you're more than happy to get out of it all or to hedge it. You can throw the futures on whatever you're allowed to do. But in my eyes, as I speak, I am looking for places to buy, and I'm buying for the next 7 years. Okay, that's how I'm looking. I'm looking for a larger cycle. Okay, so this may be the only opportunity I get for the rest of this cycle. Okay, because S&P is 683. Do I think it's going to go down there again? I can make a reasoning why, but if I'm right and we do get inflation, that usually helps equity prices. Okay. And the other one too is just like we saw through the 80s, we had fuel prices come down and stay down, and stocks took off. So, but that's here nor there. We'll see. We'll know more by November, December, and I'll of course update you on that kind of thing. So on this one here, I played as it's weak. I accumulate on weakness here. Blah, 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 that chart's all messed up. This one's basically the same thing. You can actually say it's a long sideways pattern. You could say head and shoulders type of deal. Buy-in weakness, but because you can look at these things over time. There's not a lot of people in this one too. So buy banking and insurance on weakness, because over the long haul, that's going to work out too. The textbooks are all wrong with their, negative interest rates and their ZIRP and stuff. It just tells us that we're in a serious economic, we have a serious structural problem here. But as I pointed out, I think on Friday's video, or for you that were in a private thing on Thursday, interest rates have already moved. I think Germany actually closed up positive today in rates from negative. So what's going on in the background is the kids and everybody, they're not paying attention. Rates are headed higher. And then the front end, whatever shakeout we get here Sunday, Monday, Tuesday, if they go into the debt, then you want to fade that. All right, and I threw on some money center banks while I'm at it. Bank of America basically looks like those other patterns. I believe Bank of America does business with half the country through business or mortgage or whatever. Technically, they should be broken up. That would be a good thing for you M&A people out there. Get on it. Bust this thing up. Break it up. It's kind of like the baby bells. It helped. Well, let's see. We're going to take Mama Bell and we're going to bust it up into 8 little pieces, give them a couple of years, and then they'll merge back together and, whatever. I think we're going to probably see some of that too on the cell phone side. After my little shock of $100 or $200 extra fee per TV a month for using internet, my phone bill is the only one that hasn't gone down since we broke up Ma Bell. And I'm not a huge fan of the phone because I'm busy trying to focus. And just the amount of money they get, even though you say $2 a day or whatever, or $3 a day per person, what are they paying? $80 to $120? That's what I met a guy, him and his wife, they're in their 60s, $400 a month. I'm like, oh. I mean, yeah, I have iPads, but whoa. You know what you get for $400 a month in a new car? As he's driving around in a early 90s Econoline kind of thing. What do they call that? Customize or something. All right, so Bank of America, it's basically a pause here. A lot of people are into it. For me, this is all time. We'll know more about it Tuesday, because the deal here is I don't think that this is going to be a full reversal and take off to the races. I think these guys that have to buy are going to sit on their hands, and we're going to stoke the fires, because if the majority, 2/3 of the country doesn't want Trump, and he's going to make a hell of a show talking the debate thing. it'll be just enough to convince the people sitting on the post. Me, like I said, doesn't make any difference. It's what other people believe, and that's my only concern. But since I'm slanted on it to go down, yes, I prefer it to go down, but it brings misery, but it also increases subscribers. All right, whatever for that index. Oh, here's a good full reversal here. Look at you. This one jabbed through the top and came back down. This one looks like 1950 or so. 24, where we close, 23 3/4. Okay, so just set an alarm for like 24 1/4, 24 1/2 for a reversal. But this thing looks like it's going to go 21 and then 19 1/2. That's how I'm looking at it for right now. BMO, yeah, that too. Canadian, right? Yeah. Where are we at with Canada? Oil, we're from yesterday's video playing the odds on oil, 47, 49, 51, 53, 53, 54. If it gets up there, take profits or write calls and buy puts, that kind of thing. For right now, what I'm seeing and what I'm feeling is that we're filtering through the obviousness of a stronger dollar through these markets right now. And a stronger dollar means stock prices, depending upon it, if you're in now or not, are either more expensive or less. If stock prices fall and the dollar goes higher, everything basically being moot point. Bank of Nova Scotia, these all look like they've had enough for right now, the Canadian ones. And that's pretty good, 61 to 33, we're cutting half in 2 years. We go up a half a year and just come back down. But short term on oil, I would lean more, I'll say bullish. I'd rather bet on $51 oil than $37 oil for right now. How about that? This one looks like a good scooper here. Okay, so if there's a disaster, this is one I'd want to buy. Better save that one. All right, looks like it's working on inverted head and shoulders. You get the baby with the bathwater. It comes back down. I have no clue. I'm not a fundamentalist. I'm a technician. I just look at it. At best, it's sideways, which means it stopped going down. So after it goes sideways, it can do one or two things. It's either going to break up or break down. I haven't a clue, but I'd be willing to buy this one 1850 or something, or 15 options. Yeah. So write some options at, what do I want to buy it at? I'll have 2150. If you can get $1.50, on an at the money call or something like a 20, try to get a $1.50 for the 19, $1.50 for the 18. Then you can kind of scoop it up. Somebody will pay you. You get some buffer. And what is this? Banco Santiago? Where is it at? Santiago? Is that in Chile? Oh, I don't know. Whatever. Okay, Citibank. One of these zombie things. This to me, this looks like it's headed back to the low or upper 20s. This one, too many red candles. A lot of extra selling going on. This Imperial Bank. Yeah, they just look weak for right now. CMA, remember there might be mergers and stuff going into these things too, because of they still have to do their thing. Well, what they want is the accounts, and they can do without the labor. So they merge, big ass piece of software, and you can get rid of half the branches and turn the other branches over. Oh, so you want to get in the sign business. All right. Okay. So this one is kind of a few extra bodies in here for now. Jab up above. I think it's just a large distribution pattern. Do I think it's going to go down? It's going to lose half. I'm not as strong on this one for it losing half, but it'll definitely come down. This one kind of thin and shot. This one I'm not a big fan of. I do like the fact that it kind of held itself together. It's just not a lot of it's just been unidirectional, double top. I suppose if you can buy it between 12 and 14, I'd go in on it. It's at 17. So see there, you're looking at 20% pullbacks. So, wait, so what do we have? 2,200, 10%. What's that? 2018, 1780 on the S&P. Oh, this is a good one. Republic Bank of San Francisco. That one looks like it's coming down to 56. There's $20 there. It'll at least get to 68, 66. You make $8, so 10, 12, 15%. Yeah, 12, 15, 13%. That's not bad on the short side of things. FSB. That's cool. Stall. A lot of bodies. They're either going to have to get it to go. This is either on something on a buyout or somebody really screwed up here. It's two things, either a buyout or somebody screwed up. This one looks like it's gonna swing lower. It's just a series. This one hasn't found a bottom yet. It did here for the first round. Actually, I'd buy in at maybe 8.5, 7.5, or if these guys are taking capital, you can inject it into it. Become a board member. This one is a nasty reversal. This one's headed down to 26 from 31. GWB, no options though. And that one doesn't work for Kevy. Holy buckets. I'm gonna have to take a break here. Maybe I'll just do that one, banking. This one's gonna see the bottom end of the channel here. Wow, Kev, $8 to $6.50. We'll pass. HOMB, that one looks like a pullback into this area too. $5 loss on this one. HOMB. IC Bank, is that Iceland? I'm not sure, but maybe on a pullback. Is it dividend? Yeah, dividend. Whatever. If this is Iceland, it still probably has issues. Where's the money flow? No, it needs help. Oh, here's a reverse. JP Morgan. Oh. Didn't really jab its head through. The deal is that you probably want to be a little more cumulative on this guy here, just due to the fact that and Wells Fargo have been pretty strong. Usually how it goes is in this type of game right now, what you want to do is you want to buy the weak and sell the strong, because we're getting a pullback or consolidation or correction in a bull market. Like I said, I don't think this is bear. My bias is down, but I think this is just a quick 4-month lose anywhere from, I think June or July's video, I said about 23% or so. You throw 20% on the screen, oh no, bear market, blah! And they can sell it at the bottom. We'll see it when we come to it, kids, won't we now? We're going to go and hold hands with Kevy. All right. Yeah, triple top here. So, but I just due to the fact that everything comes true or it doesn't come true, you want to kind of get into this one in Wells Fargo. A lot of bodies in there now, so maybe something quick under. Yeah, set an alarm here. They'll do the 55, 55, 54, 52. And then see if you can start scoring it around 46 on more. But it'll be, like I said, it'll be quick, But there's a lot of money that, what's this guy here, 40? Oh. So what do we do here, Kev? Do we put in a good till cancel? What is this, a 46? And that's at a 40. So you buy a 46 call. What I'm talking, okay, we're back to the main thing. Okay, oh crap, I gotta turn my crap on. All right, hold on, I gotta put an order in. A fake order. Hold on, so it's been like an hour. Where's my software? I can't even tell if somebody's wrote to me. All right, bodies are still in here, sweet. Okay, where am I at? Go back to the camera, go back to your thing, Kev. There you go, all right. Let's take a look here, JP Morgan, and my dummy account, JP Morgan. Now you bastards. All right, so that brokerage firm is loading software. What about this brokerage firm? Now, do it this way, Kev. All right, I'm going to go and actually, will this work? Let me see if this changes. What do we got? I want CBOE. CBO.com delayed prices. That'll work. Oh, I get to make stuff. JP Morgan. Right, Kev? JP Morgan. Get quote. Not jam, you sons of monkeys. JP Morgan. All right, so JP Morgan, option chains. All right, September, October, March, and June. So let's go to June. At the money, no, I need to go out of the money here. Okay, I'm now looking for, there's a 40 call, we're at 26. All right, for shits and giggles, Kev, right? There's a 40, 45. Okay, 40, so 22. So $20. Okay, what do we have? Open interest, volume. We're down here at the 70s for the calls. Shits and giggles, what do we got for the puts? See, they already have a buck on these things. All right, 6, 7, 8, 9, 10. So what's that? 10 off of a 75 is 65. So they've only priced in, okay, so on these 75 puts, what's it, bid ask? We'll call them $10. So the marketplace is only saying that between now and, I'll take a picture of it. All right, between now and, what is that? Oh no, what am I? I meant the Junes, right? Yeah, June 17. Okay, they expire. Okay, on the 16th. They have $10 in the 75 puts. So I go back to my chart. JP Morgan. That's right there. Okay, so I said $10, right? So that would be where we close 66.56. So they're only going down to here, and then they'd have to really get off the pot. Okay. So what I'm looking at is it's one of these things that, you know, okay, say for example, I want to buy like a 40, you know, I don't mind getting in under 52. The option players only have it at 56. That's how fine tune all this is. I mean, it's, you know, if it clears here, then they have to chase after it. Then it'll probably go to, or they'll have to sell off. It'll probably go to 40. So what I'm getting at is, okay, well, I'll say I'll take 46. So you go in there and put in an option order. What was it, 45s and 47s? Okay, so we'll just say 47 and a half, which gets us up to here, 48 or round number 50, whatever. Put it in for $1, put it in for 50 cents, put it in for whatever. So if it is a one-time deal or whatever and it's quick, all of a sudden your option, even though it might have time or something, is going to be out of money. It's one of the, you know, you're at least it's resting there, you know, for $100 or whatever. Go put in a June 50 call for $1 or 95 or 105, you know, whatever. All those stupid round numbers with people. All right, 105, whatever. Once I'll post this here. Actually, Kev, be a good little boy. Mark it up. All right, mark it up. Have the arrow. All right, I want to do this right in here by June. Holy shit, what month are we? This is the downside of living in Arizona. Okay, what month am I in? Okay, so it'd be 2017. Jesus. Well, the needles don't fall off the cacti there, people, you know. All right. I'm from Minnesota. Yeah, that's for sure. And I have to remember, well, what is it? It's like 80-something degrees and the sun's out. You know. Okay, by June 2007, it's 46. Well, maybe they'll start listing some in the cycles. 46 to 50 calls. We call at $1 or better. There. Whoops. No. 40 is what I'm going to get at. No. You need. No, you're going the other way, Kev. 50. Where's that 52? 52 is pretty good. We'll do it that way. All right. So what do we have? 52, 51, 50, 49, 48, 47, 46. So that's $700. So, okay, blah, 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 blah. Or scale down. We wrote it wrong. Scale down. Or scale up. No, scale down. You want to buy it on the way down. Well, you can't write worth a shit, but good. All right, that's what you want to get. So by June 2017, calls, you didn't write that. Or scale in, you moron. Holy shit, what time have you been? Oh, I've been up since 1. Okay, scale in. Into bed at 5 or 4. It's Friday. By Friday, I'm pretty freaking loony. Do not order me like Rumple Mints on a Friday. No. I'll be on top of that table in no time. Pretty loony. Okay, 52. Scale in 52 to 46. Add a buck or better. June. JP Morgan. Hold on. Buy. Good God, Kev. You don't even know how to put it in order? Well, that is the downside of taking these exams when you score 85, 85. They don't tell you the 15 points you failed on. So every time I'm in front of somebody important, I just said, well, I took the exam. I didn't know which one I got wrong. Bye, JP Morgan, June, blah, 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 calls. Holy bucket. You don't need to scale. They'll know what to do, right? Jesus, Kev. All right. So that's what we're looking for. So what you want to do then, $700, whatever. If it's if we roll off, all of a sudden it's, boom, 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 and it begins to slide. You have bodies in there that some of them have come out of it, but you can see here that the bottom, this red unbalanced volume, JP Morgan hasn't been oversold since 2011. Okay, so here we have this little pattern here with the failure. This is just resting. Okay, so this is basically it. On the flip side, of course, is you're going to have to, what happens if we only come down to like 64 or something? Something happens. There's a shake, and then all of a sudden everything changes, just like we saw with how they moved precious metals and some of these commodities. It just turns. We all of a sudden, remember, we're dealing with computers here. We now have limits on some of these stocks. We saw the flash crash. We saw what happened to ETNs. Okay, this is it right here, right? Yeah. So this is China. All right. Devaluing your currency, which of course has only gotten worse depending upon how you're looking at it since they've done this. So we went from 68 to 48. Okay, so the same thing. We can go from 67 to say 44, 40, somewhere in here. Same principle. I'm not going to go back and see what the options did, but you can see, boom, and you're back at it. Okay, so I'm trying to snake something here. Anything under 52, I'd be more than happy to buy more, all the way down to 42. If I had to put money to work, take it puts. If I was managing some monies. Other people's monies, but I too, my friends, I'm an amateur like you guys. I no longer carry. I just do the analyst side. I like that. Somebody else can do the mechanical side. All right, so I have that. I save that. Ta-da! And I'm going to keep it private, except for the people who watch the videos. So you lucky buggers, you guys get a freebie. All right, I'm getting really sick and tired of all of this stuff here. Let's go to commodities or something. Where were we? Morgan. Oh, didn't see that yet, so did not know that the gum was loaded. So, saw that ticker. That's a sell. That's a reversal. Home, okay. Oh, JP Morgan. All right, good. You stay there. MTU. Yeah, Mitsubishi. Yeah, it is kind of oversold. So this one is one of those where you buy it like 480 and then you sell it at 630 here, if you're into that one. Kind of fat bars. Not sure what the story is here, but interesting though. This whole chomp, and then big capital infusion. This one might be interesting in a pullback here from 11 to 7.5 OFG. Oriental Financial Group, whatever. OPB. That one looks like it's going to swing to the upside here, but it could be distribution. So the PNC. All right. This one's going to have to be watched closely here. It's doing the same pattern as Apple. But remember, if there's a merger thing, that's the only time that they get you when they're coming after, if they go, oh, we want to merge. I don't know who can merge what. That's not my forte. Ooh, big reversal here. Utah Bancorp. But remember, $1.2125 we're talking $1.50. I guess it's 5%. Let's go ask the people who own that. Okay, I have to find that one out. Same thing here, except for resident. Yeah, some of these that have that kind of swing, it's a little bit further up here. You may want to keep a close eyeball on some of these. They may not give you enough, may not drop a third, quarter to a third, another one of these here, because it has been marching. I mean, this one looks better than some of the other ones here. There's a lot of bodies in it for right now. We need to shake the tree a little bit. The best thing for the bulls is having the S&P fall to, like, say 1,600, and then triple it in 8 years. I dare you. All right, 16, 32, 48, yep. ROI, pullback here. What's this? Royal Bank of Canada. Oh, that one looks like it's going to go to 54 from 62. Just swoon. Remember, we also have harvest going on. The oil thing will be interesting. Ooh, there's honey in that tea. Harvest kind of thing. I don't know right offhand about cyclicals on these RY, but we can take a look. This one's a little too thin for Kevy. FNC. This one had the same type of pattern, but it looks more bear flag-ish. But I'm summons FN whatever. Yeah, but it does have the March thing going on. So remember, even though this one has the bear flag going on, you get the interest rate rise and it only drops, say, 10%. They're going to go, oh, guess what? We get to charge more. And you may have people, I don't know how much out there is with floating debt. This one looks like a reversal here. Southern First Bank Corp, 25, 28. So that's 10 or 20% here. Maybe down to 22. Just so you can see the fat bar. This is where the strong hands came in and bought it. Then they unloaded, and they couldn't find any more. And they'll probably unload around 21. FS. ST, and then am I in the last one here? STBZ. Looks like a double top for now. Stubbs STBZ. That one looks like another reversal too. So a lot of these, you have this double, triple, quadruple top here. Somewhat of a pullback here. 10%, 15, 20% here. Yeah, so it does look like we're going to get somewhere, 10 to 20% on the stocks that you want to own as interest rates rise, financials and stuff. Here's one, TCF, same type of pattern, just stalled here, like an ABC pattern. Okay, a couple of bucks on the downside. Last pages of banks. TD, oh, they're loaded. Short the hell out of TD. Oh yeah, stock market goes down. I wonder if TOS is part of TD directly, which is interesting, of course, because remember, they're an American, they're a Canadian bank with, I think most of their accounts, well, just shit in general, Kev. They're more freaking Americans than Canadians. There's probably more, I wonder if there's more Canadian Americans in America than in Canada. No. That'd be too much. All right, this just short the hell out of this. And here's another quiet one. 29. Oh, they'd hate me if I did that. They occasionally send Kevin an email. But it's one of those where it's kind of I use their platform as a retail guy. I use their platform to help other brand new retail people. Because occasionally they throw you that bone for open up an account and they'll give you, a couple dozen free trades or whatever. So I help out people, it's a business, right, for these guys and stuff. So it's tough for me to say, just short the shit out of, but I can think of all the nasty times that TD was just cheesy to me. They weren't being very fiduciary in their responsibilities to Kevy. But I'll just between you and I, short this thing. Shut it down at least 38 and change. All right, and then it's just. I gotta remember that one. Kevin, you're gonna leave on a positive note. Oh, here's another one. TSC. I don't know if you guys want to short a $15 stock down to 13 or 12. I'm not. I can get it somewhere else. Ooh, that's a little pattern there. Yeah, short this one down to like 12. Who's this one? United Bank Shares? Yeah, there's a good short for you. Okay, you got to go through these again. Yeah, okay, I'm getting bored of this stuff here. OCD kicked in. Wells Fargo. All right. So here's the ones, the same type of distribution pattern. God, this looks like it's gonna come down 30%, which would be about right? 30% would be $15, would be 35. Oh, we get to play Fibonacci guy. All right, here's going to be another one of your make or break. You throw your throat out there into the, what am I looking for? Go to here, go to this thing, we'll do quadrants for now. I'm just splashing something on there just to get a kind of an eyeball. Okay. And then how about we change you a different color right offhand? Okay, good. And then I go to Fibonacci's. We'll go down. We're going down, 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 down. All right, that's you, but we're going to change your color to red. And we have to get you to go back the other way. Oh, you bugger. Oh, you did go the other way. 2 lines are there. That'll work. I'll just do it this way for now. Okay, let's take a look at this here. Oh, 42, and it's at S2. All right. Grab my little doodle whacker, take it here. Here we go. Cover. Scale and cover, I guess. Scale down. Scale down. Scale down cover, right? Oh, you banana head piece of cheese. All right, so scale down cover there, but ultimate goal down here. Target. Oh, where the hell did you go? Oh, you piece of cheese whiz. Come on. Oh, modern technology. Target. I want yellow. All right. 35, I said. Yeah, we'll do it this way. That'll be interesting, Kev, if that happens, buddy. All right. So basically, we'll say it's stuck in a channel here and here for now. Okay, but I think it's more distribution it'll come underneath here. I'm sure the money guys will start coming in at 44 and buying, scaling it in. I don't know how far. Like I said, what is this? This is a weekly. Set an alarm at 51, but all of it, high, lower highs. I can see a 42 coming in. Set an alarm for like 44, then 42. I wouldn't mind owning Wells. I think they're balanced, whatever. Balance sheet, income statement. What's the other one? Owner's equity. But I'll play further down. I'd probably start coming in with the kids under 42 and start stoking them that way down. But play the evens. Buy at 42, buy at 40, buy at 38, buy it. It's kind of like what do they call that? Averaging down, you buy whatever, $4,200 here, you buy 4,200, or buy $1,000 here, $1,000 here, 1,000, on every, even on the way down. And that's where writing naked puts comes in. But Cav, it could go to zero. Yeah, whatever. That's why I'm your fishing guide. I bring you to the fishing hole. It's your job to fish. The fish are down here. Figure it out. Okay, cool. That was my disclaimer. Let's see here. Let me go to since I'm at the end of this one here. Did I get them all? Yeah, we'll say I got them all. Okay, so let me go to my software thing. Software bodies are still here. Peoples are here. All right. Let's go through commodities. All right. That was Brent. Okay, Brent. All right, commodities here. Oh, hold it. Is there a pause button? I wanted to go get some iced tea. All right, more. Is there a pause? Okay, I guess not. New piece of software, trying to check it out. Pause recording. Excellent, guys. I'm going to hit pause recording. I'm going to go and skip to my Lula darling. And then there's a chat thing over here. If you have a ticker you want me to look at, but I'll be back. We're talking seconds here. Just got to go fill up my tea and stuff and use the loo, but I'll hit pause so you guys don't have to go through the commercial of listening to me fill up my tea. All right, I'll be right back. Pause. Rock and roll. Okay. Cool. All right, I'll be back once again to the exciting hour of going over commodities. Maybe we'll find another one, just like gold and that in November and December. So let's get back into the fun of this here. All right. Okay, commodities. Where am I at? All right, so Brent crude. Okay. What's interesting here is Brent crude. We have a $10 range. What are we at? We're at weeklies here. I have to do this here. All right. It's narrow. Basically, if it goes above 51, take it on the long side. Come on, you. Any day now. All right, so the range is narrowing here. So under say like 52, take it on the short side. Under 51, take it on long. Then there's a shot at 60 on here. Okay. Now here's another little quip here. These funds, if they come in and bully from like Thursday's deal, if they come in and bully oil, then all of a sudden the Federal Reserve can say, hey, we're beginning to see inflation, because they'll immediately start jacking up shipping prices and everything. I mean, you go from 47 to 60, you can start upping the price for delivery of goods. So it'll filter through. So there'll be an excuse. We can just use the hedge funds as an excuse to pump up interest rates, maybe at a bigger clip, depending upon what happens. All right, the Canadian dollar here. The Canadian dollar goes higher with oil. Like yesterday, we showed that 1/3 of oil that comes in America comes from Canada. Okay, so hence the Canadian dollar goes up, so should the price of oil, or vice versa, oil goes up. Okay. I'm going to lean towards this way right now, that I'm a little more bullish to oil than bearish. That I was leaning just for the short term. It's just prices. Okay, cocoa. Cocoa looks like it's rolling over. It's also in British pounds. It's traded so as the pound gets stronger, cocoa prices should come down, all things being equal. But cocoa looks like it's going to come. This is coming off of a pretty decent high. It should begin to move down. That should help out your Hershey's and stuff. Coffee looks like it's swinging. It's counter seasonal for us. So their summer and winter is opposite of ours. And also it moves at different times. I think it had a run in 85, and it runs at different periods. It doesn't follow a typical seasonal cycles here in America. So this is one of those. I think it's Joe. JO is a symbol for an ETN. I like coffee. I liked it better back here, but it's still quiet. Any pullback, I'd maybe add to Joe. I'll look into that. Copper's going to run into problems with the stronger dollar. The other thing too is that we'll use copper in cars and homes down the road, but you looked all through the 80s and 90s, copper, it was pretty. You could see copper back into this area here under $2 a pound. Corn, we're getting a seasonal move on corn here. Corn should have a pretty good move back up to say what's that, 380. But anything up here, if I'm a producer, I would definitely be hedging my crop for 17 and 18. Just like I said with beans, further back, we'll see beans here in a moment. Cotton's another one. This is base building in my eyes. Cotton's an expensive little bugger. Every penny is $500. So this one moves just like your little ES guy. Let's see. It can have a decent move. You can see all the people that got into this here. So we'll probably see somewhat of a pullback. I'll have to go on a daily here, but I like it. Maybe the funds will run into this one if you catch my drift. Gasoline looks like it's an inverted head and shoulders, but basically I'll just use a big sideways pattern for now. But basically it's looking like this shoulder ahead and shoulder again. Your neckline, maybe up to $2 on here, or at least from, what's that, 160, 170 to 192 bucks. Gold looks like it's doing somewhat of a flag deal here. Also, that can be spun too, as if the oil does move, we can say, hey, there's inflation in the system, and that's why the Fed's raising rates. People go, we need to jump on gold. Gold, as you can see up in here, a lot more people in the long side of it, and it just continued to roll down. Here, there's about half or a third of the people here, but the price has moved up, so there's more people that can get on board. I'd have to drop this down to a daily because the range is dropping. It's a $75 move. I was looking for 1,400 back in November, December. When I turned bullish on metals, I only thought I was going to go to 14. I'm playing because I think the strong dollar will prevail, but we'll see here how things pan out over the next couple of days. Heating oil is basis for diesel. Gasoline looked a little better than diesel does for right now. All right. Lumber, I'd like it on any pullback. Might run into issues because we get a lot of lumber, I think, from Canada too. But that comes down to your housing. Natty gas, basically any weakness, I'd like to buy it. For right now, if it goes to 3, I think it'll blast through 320 and then go to like $4. I'll use a high I'll use this R1, what is that, 324 up till October is a high, and then December, January, February, 420. Okay. But I'll just basically play it on any pullback I'd want to buy some. Don't forget there's many futures contracts. Palladium, this one doesn't look very good. This looks like corrective in nature here. I'd say a large sideways pattern. Palladium, this one even worse for bounce, large sideways pattern. You could say shoulder, head, shoulder, but for right now, there's not a lot of people in it for right now. I just stand aside. I'm not a big fan of that. Silver, I did mention it was a bull flag, that we did get a bounce off, but there was a huge reversal. I'm going to play it as just a longer sideways pattern for the last 4 years, 3-4 years. I'm not chasing after it either way here. If I do have some DSLV, so I'm playing I'm playing it to come down. Okay, here was like I was talking about the hedging on the beans. Here's $12, $9.50. Any bounce in beans up to $10.50 again. I'd short for your coming crops of 17 and 18 if I was a producer. Sugar's interesting. It's getting a little more movement on here. If it clears this 22, 21 cent level, the angle of ascent will increase. I'd expect the funds to come storming into that thing. I think the funds are going to just rotate through these commodities and blast them every once in a while. Wheat, I put on a accumulate, start dealing with an accumulation type deal. You could say like sell a 380 put and then a 260 put, that kind of thing, to try and get long. This one is counter. It has different harvest. You have both the summer and the fall, and wheat is one of those things that it's easily, you can rotate. You can drop seeds from an airplane or a helicopter and the stuff will grow. But it's approaching an area, even if it takes off another buck or two, I'd be interested, because you're going back the other way. I'd rather risk $2 to the downside and then versus $4, or if it drops to $6 or $8 to the upside. But that's one of those where you're going to have to go and stagger your contracts. And then crude oil here is basically, I'm trading it as sideways between, what's this here, 40 and 50. But I think we're going to probably get a breakout to this for whatever reason, for whatever the funds just come in, or we get something anywhere, Middle East, United States. It doesn't make it you don't need an excuse once it, oil moves $2-3 higher. I don't need to know why. And then this one is the wisdom tree index for keeping an eye on commodities in general. It's basically been oversold here. This one might move 21 to 25. So that's a good 20% on the upside. Okay, so this is all right. These I think I posted for, I gave out free earnings stuff. I like the short side of this one here. It's just basically started. I put it down to about 29, so it's a 25% drop. I don't know if I did it to all of them. Okay, yeah, all right, so I'll skip these. Here's a short, AGX. Okay, a lot of volume here. This one, okay, so we did get a spike on it. So this is a good one to, what do we get, industrial machinery? Yeah, this one, they gave you the gift of the new high, so go after it as a short under 49. Where'd we close? 51. So we're talking $2.50. I'll skip these and let's go into something else. Too many stocks. Oh, here's this one. Here's another gift. BRC, same thing. A lot of wide movement, spinning top, good enough to roll over. I even marked it up there ahead of time. Oh, Kevin, you're such a good boy. 34 to 27, down 20% BRC. BV, that one was 100% on that one, huh? Well, it moved. Whopping 50 cents, but it was good for 12% move in the week, right? Yeah. Casey, good Kevy. That one rolled over. Maybe we'll get more down to 90 on Casey here. CEO, I thought that one's just been going down for a while. All right, we'll skip that. Currencies. Let's see here. Okay, so we went through that. So we'll just zip through the currencies. I'm liking the long dollar yen for move higher in the short term, depending upon what we do with people running back into debt. I don't expect it. I don't expect it to go below 95. I'm looking at it more of I'll take anything I think this is just an opportunity, just like Brexit. It's an opportunity here. I think this is just basically a 50% pullback in the next move higher, because I think the dollar is going to be sharply higher as money comes into the system from baby boomers moving on up. Okay, and you can just, what do we have here? Okay, so here's the pattern. If we can get it up and through the 104 again, then I have it at 108, 107, 108. If it dips down below, what is it, 95, I'd be interested. Most of this, anything under basically 90, under the Brexit lows and stuff, there'll be some serious issues in the stock market. That's for damn sure. No doubt about that one. Because the yen was part of the carry trade. Just a bigger Japanese yen. This is just the cash one. You can see the turn here. Pretty good call, Kev. All right. So we have, but I think that this might be it for now, and it pulls back. If that does, then the U.S. yen goes higher. I do like the dollar, or I like the pound yen as a trade. Here's the dollar. We'll get to the pound yen, I guess, here. Dollar moved up. This is on a daily. Okay, and so this is kind of like a 50% pause before we go higher. The next swing I'm looking for is like 103. Okay, here's a monthly. So yeah, so it's basically the same setup. You go back to here to like, here we are, just like I was telling you about the stocks, right? Here's 95. Okay, 96, 97. You have your Asian contagion. That's when the Thai bot blew up, a long-term capital management that had 2 Nobel laureates on there. This hedge fund didn't even bother to use 87 crash. They only used 5 years worth of data. They got jerked out of the ground within a year. Was it 2 years, 2, 3 years, whatever? They didn't last. All right, same thing. And then the Asian contagion caused Russia to file for bankruptcy. So we may have, if oil goes up, it may be an opportunity then to sell Russia, because when they raise interest rates, it'll be difficult for commodities and prices will come down. All right, so here's the dollar. Here's here's 102.5. Here's 92. Well, here's 100. Here's 92. Okay, so same type of pattern. And all of a sudden it takes off running. This is 1998, 99, 2000. So same type of deal. If the stock market's going to continue higher, it'll be a 3-year deal into 2000, which is, I'm looking for a recession. So the dollar may take off, which means if you buy equities with dollars, if you're currency creators, on the repatriation, you get a better deal on your currency swap. All right, so here it's digesting the move from the lows. This is the unwind from the commodity cycle. This is the peaking commodity cycle. And here we are. I think we're going to go higher. Okay. Bigger. Same thing again. Stuck in a sideways channel. This is the midpoint. It breaks through 97, then it's on our way to 104 for the dollar. Same chart. I guess I screwed that up. Here's a bigger picture on the dollar on the yearly. We basically broke through, retested. We're here. You could grab a big triangle here, break through. 120 was under Clinton, 164 was under Reagan. So somewhere, after 104, then 107 is a stopping point, intermediate or long term, and then 116 to 120 for that. It all comes down to the timing into the next recession. Currency trust as this goes higher. U.S., Japan goes lower. Okay. Right now, sideways look to it. There are bodies in there, so I'd like to see this roll on over. Okay, point and figure, basically the slide into Brexit, the bounce out of it. Now we're doing the 50% thing, so it's undecided for right now. Like I said, I'd like to see it come down. There's a better one, I think, right here. Okay, so this is the point and figure. This is the yearly. So this was the peak in the euro or the US Japanese. It bounced up. This would be a good point to sell the yen and have it come back down. And this is the opposite of the other one. The YC, this one should come down. All right. This one is an accumulation. Depending upon, you want to look at it this way. Depending upon how badly stocks fall and equities fall, and it comes back through, you can look at like 50 and 40. So you want to kind of stagger these out to get back on. I expect it to go back up to 82 from what's at 62. So that's 30% higher plus minimum, just a minimum. But if it slides down, then you want to, save some powder. I don't follow too much, but for an accumulation type thing, that'll work. Currencies are, the leverage can get to you, so you have to have staying power. Okay, here is the pound and the yen. It cracked your Brexit. All right, so I'm thinking that we're getting pretty close here to a low before you can just buy both of these, a pound yen, this pair, and just sit tight. Just put it in, open up another little account, open it up, and just let it ride. Okay, here is the Swissy, same type deal. No, excuse me, Swedish kroner. All right, in the end, I'll pass on that one. Euro, yen, same thing, except for I think the euro is going to come down here. Okay, so that's why I kind of preferred the pound. Same principle again. We're back to the Swiss franc. Okay, you can see how this was the strength in the Swiss franc. I expect the franc's going to have issues, but eventually, though, the yen will take over some of the pain. Same thing again. Aussie just looks like a bear flag. Looks like it's going to come down. Aussie should have problems when commodities roll over. Did I do that right? Yeah. Okay. All right. Here's the CAD. A little bit more on the downside here, but then it'll turn with the yen strengthening. You can see it's probably going to work its way on a little bottom here before it turns. So we might have some time. This would be like working with the oil, a stronger CAD and with the yen. So we'll see how that pans out. So what do we have here? 79 to 85, 86. So 5, 6, 7 pips, 100 pips higher, and the risk 900 lower. What's this one? 500 lower. So it's basically underneath here you want to buy, and underneath and up above here then you want to sell, because eventually the commodities will take it in the shorts. This one, Aussie again, right? Yeah. So you can see how it's just going to slide into a multi-year low here. New Zealand, that one's probably going to be a decent sell here. I should look into that one. 62, 75, 1,300 pips lower. All right. Okay, so here's your British pound again. It hasn't been updated yet for, weekly. All right, so you can see here, 2012, you get a sideways thing and it'll take off. I think it's going to actually go higher than this. Like I mentioned in yesterday's video, the ERM, exchange rate mechanism, and the pound blew up. I think it doubled in 5 years. And here you can see the euro and yen with moving average sideways. So we might get some here on the euro, but I believe that if the dollar is going to go up, the euro is going to get pressured. But that's when it comes back to the yen. Here's your Brexit. So, even if we get the yen to come back up, it can pull it up here. even though the euro, I mean, what's the euro? 13, 12, 11 goes down to like 106.78 kind of thing. Swiss franc, you can see it sitting here. So we might get some on the end. Don't forget that the Swiss may intervene in their currency. There's the CAD, it's basically the same thing. We're getting a divergence here on a weekly. This is the MACD here, so we're getting some divergence. All right. Aussie dollar, triple hook here. So it looks like the yen, and then they'll chase after the way that they puked up the yen at 122 to 94. All of a sudden it goes the other way, and all of a sudden it just starts marching again. This is reversed. Yeah, I like to look at them both ways. Okay, here's the trust. Okay, FXY. So this is what I laid out. Where the hell is the mouse? There we go. It would come down, bounce up, and then here's where we're at, and then we're going to come back down. So this one's a short from like 94, where are we at? 94 to 88. So $6. $6 on FXY on the short side for just the minimum. It was a bell curve right here. So that's that. And then okay, so these are the bonds then for the JGBs. This is moving higher. Okay, trend is your friend. Let it continue to go. The inverse. So this is, you want bonds to go down. This goes up. This is on the long bond side. It's rolling over. The short side on those guys. Okay, next list. Screwed up chart. Oh, Japan, that one's down. Okay, same thing. How big is this chart? 2 hour. Okay, so we're back to the yen thing again too. Where's Brexit? This Brexit here. So Brexit here, that was the low. The 93, we're up to here. We've come down 50%. We moved 50% there. We moved 50% here. So I'm looking at it to swing higher. But we'll see how it pans out with equities on Sunday and Monday, Tuesday. Got to give it 3 days. Here's the dollar yen. Any type of weakness, I'm all for it because you're beginning to go back to 14 and 13 levels. And I think it's going to go higher because of the dollar strength. So, all right, so I have that. And then on the last ones, I think, what do I have? Okay, one more quick. Okay, so we'll just look at this here. So what do I think happened? Okay, so at the best, Sunday night, of course. All right, at best, let's see the S&Ps. All right, should take about 50%. So this is just the cash. So Sunday night, I look at it as a move from, where did we close? 27 with the futures. Oh, I have to do that too, don't I? Let's take a look here. Now let me do this real quick. SPY. How far did SPY? So SPY closed an extra 65 cents. So 212 and that. And then actually, while I'm here, futures. SPY 14, I think that's about right. Okay, daily, weekly. Okay, I was looking for the commitment of traders here real quick. All right, so, okay, so round numbers, 2050. All right, I was going to play this for 30-point range on here. Because I usually play it in 20 points ranges. You know, if it clears 2020, then you play it from 2020 to 2040. Okay, but the way that the S&P rolled over on the close, which basically we closed at the low, which means that we should see some more selling. Plus, also you have places like, I mean, here's Japan. You know, Japan in my eyes is. Do you want to buy? Oh, let's go to weekly. You want to, you want to buy some down here at like 15,000. I'd look to buy Japan on any weakness, that kind of thing. What's a monthly look like? Okay. Anything on Japan like 14,000, 15,000, I'd be interested, because you're gonna get sales everywhere else too, because the money doesn't sleep. That one actually looks like a large bear flag. So it looks like the DAX is on its way. This isn't going to hold. I don't think the DAX is going to hold 9,000. I'm assuming we're going to get follow through selling. You'll know if anything's going to happen. You're going to know by Tuesday, one way or the other. Okay, because the spin, because of the volatility, is going to be enough to spin the. Why did the market drop 1,000 and go back up on that Monday? And what? It doesn't make any difference to me. All I know is I filled up 2 shopping carts, and my only deal was that I was short in starting in April and May. It came around in August. China devalued the currency markets went bonkers. The S&P opened up, the Dow opened up 1,000 lower. I went in there and bought, and that, now that we're talking, it went up, and then my deal with there in August was, I guess I'm getting a pretty good deal for Santa. So that's how I'm looking forward, like I said before, I'm not, my bias has been negative since June 20, and now it's working my way. So I'm looking for, okay, what do I want to buy once this is done, if this continues? But I don't see the DAX holding 9,000 if this continues. It'll probably be more like 8,000. I'll just run through these here while I'm at it. Same thing. See here, you have the Euro stocks 50. This is just more distribution. That one 2,500. So what's that? 10%? 12, 13, 14, 15. Basically the same thing. Okay, we looked at Russell. Russell looks like 800. So that's 25%. And the NASDAQ is probably going to be the same thing. 35 is 10, which is 1,000. And this is more like it. Probably about 3,000 on this here. 3,000 to 35. I'll tighten it up when I get a chance. Let's take a look at a weekly. 35. What's this? So we're back to, So you want to go back and aim at your 2014 levels. S&P 500. 2014. So here's 17, 18. Yeah, I'm going to assume that this 18 is not going to hold, and we should slide back down to 16. But that's, of course, is you got to bust through the support level here. This isn't a very good pattern coming off of this. This is sickly. Same thing, 13,000 in the Dow. Okay. Yeah, here down here, just looking at it, commitment traders, large traders are long, commercials are short. Guess who's getting screwed? We're once again, we're screwing the big guys and the funds, currencies, metals. Let's take a look here. Take a look at gold and silver. Large traders are long. These guys are short. That's the whole interest rate thing. Silver, not as much long, but they are definitely short down here. Commercials are going to win there too. Oil. Crude oil. All right. Looks like it's flat. All right. So 46 is a trigger. 40, 45, 40, 44 and a half. All right. So down here, 44 and a half. The bulls should have to hold this thing, but I'm gonna take a look at the funds to see what they're doing. They weren't doing anything, where they were long here and they've pulled some back, but they may have chased again. I haven't looked to see what the commitment of traders is for right now. Let me I can zip over here, take a look. The date, the 9th. Yes, I think that was yesterday. British pound. Oops. Mouse moves too fast. Up a page. Up a page. Up a page. I missed it again. Down. Natural gas, gold. The hell is my oil? Yeah, whatever. Okay. S&P is a short. 10-year. Looks like they may chase after it here and move rates back down. Yeah, gold. If gold breaks, it's going to break hard. Looks like too many people in natural gas. Too many lungs in natural gas. Here's crude. Okay, Mexican peso. All right, here's crude. So what do we have? Positions. So we have too many longs in here. We'll see. They can come back. They can turn. They can turn on a dime. They kind of like here. They moved pretty quick here. You can see them. You know, here, chop, 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 chop. They just come piling into this thing. You know. All right. New Zealand dollar and Aussie dollar. You can short those. So okay. So telltale signs here that the Aussie and the New Zealand you could short. That means commodity prices are going to be coming down. Because I'm going to look forward. Here's short the yen. This would be the price coming up. Yeah, so you want to short the yen. That looks like it's coming down. British pound you want to buy. Looks kind of flat on the euro, but to down. So yeah, so you can see it 104 to 107. I'll say 103 is the targets for the euro for now. And then Canadian dollar, right? Oh, get up there. My mouse is acting up. I don't like that. Okay, we're done here. Okay, did I look at everything I wanted to look at there? Yeah, okay. Got to the yen, right? Yeah, where the hell did I go? S&P, okay. All right, I'll do it this way. Okay, so the S&P, let's go down to a 2 hour. Actually, I'll probably break it even more. Okay, if this was the move up in here on the S&Ps, so we closed at 30. The upper range is 60, 30 is 60 is upper range. But we had futures closed negative, so we're back to talking about premium and discount between the futures. And let me try that here, right, Kev? Okay, so this would be ESZ16, right? Is that how these work? Is it minus work on here? Okay, unable to find you. How about, oh yeah, Kev, it's not even close to 15. How about 6? Does that work? How about 16 then? Jesus, Kev. All right. No, you don't take it. What about this then? This will tell me the spread, right? Oh, you buggers, right? What am I doing wrong? Last one. Last attempt. So, oh, intraday. Oh, yeah, daily. Kev, can you read, buddy? Now we're back to this game. 1. Okay, all right. If the futures is trading at a premium or a discount, okay. So I'm using December. I'll have to go and look at September too. I need to save you. Oh, shit. Ooh, everything that contains VIX. All right, I'll do that for another time because I need to rest on the old throat stir here. All right, so go back to my charts. Okay, so they'll start talking about. I'll start talking about it on Saturday morning at, time is it, Kev? 8 a.m. Oh boy, it's 8 a.m. All right. I've already put in 7 hours. Jesus, I should raise my prices. Okay. Yeah, okay, so you have a premium and discount, okay? So this is what it is that the futures price, when it's up here, closed below the cash price. So in theory, to arbitrage, you know, you hear these guys arbitraging, or they'll arb between the big S&P contract and the little mini contract. Okay, that's how you see a bloat in volume as you're closer to expiration. A lot of all of it because of options and everything else. The computers, if one person buys it, somebody can sell it, and they offset it, and they just pick up nickels and dimes all day long. Okay, so here was Brexit. So the close between was very, very grand. Okay, very huge. So basically, you're going to have, if this is true, you're going to have heavy selling again, not as hard on Monday morning, actually Sunday, but you'll have to include it into Monday. Okay, because you're going to have to wait for all the little people to catch up, because that's the story. Is that me, you know, I haven't done a poll yet, but how about this one? If the stock market was going to crash, do you want to know, 4 months in advance or 4 hours? Like I try to get people involved as long as possible because maybe they want to take 4 months of their savings from work and buy puts, that kind of deal. I don't want to know tomorrow. I mean, I'll tell you if it's going to be tomorrow, but I'm not, and that's why when people look at what I've posted, it's buried because, I rang the bell. I just have to wait for the ship to turn. Okay, so here you have the spread, the Brexit, right? So they opened up, and there was a huge difference. We're not going back that far, but if I go back to you, this is going to have the September contract. Fill the chart September, October. Oh. What I'm looking for is I'm looking for where we had the Chinese puke up in August. Let's see. How about this one, Kev? Do they still give you M? Oh, they do. Oh, bless them. Okay, so here we have fridge packing nuts. All right, hold on. I need to go to select. Okay, I need to slide this one over. Okay, so here we go okay, I need to save this one. This one's worth the money and weight. Okay, so here you have, okay, between the cash, you just use this as an eyeball as the zero line, okay? So this is the difference between where cash closed at 3 o'clock Central Time and the futures closed at 3:15, okay? So when it gets out of whack, it's going to go higher here. And as you can see, the futures went the other way where they were running it off the bottom with the Brexit, okay? So here, okay, so if you see it above, you're going to get some volatility come the morning. What do we have here for January? Here's January and February. You can see January, it had a high to start it off. And you can see down here as it went into February, end of January and February, it began to, they were beginning to scoop up the differences, okay? So now when I get out of that one and I go into September, I'm just going to keep it anyway, just keeping the charts. September, oops, I need you to go to, well, you don't go past May, right? What contract are you? You're September. You need to go past May. 1 year? How far out will they go? Oh yeah, Kev, September's still on the board, you moron. All right, excellent. October, how about 2 years or 10 months? How many months does it go forward? That'll work. Except for, I should use the close. Get rid of all the gunk, whatever. All right. Okay. All right, I'm just going to save it. It gives me an eyeball. Okay, so here we have Brexit was off by the futures and the cash. Here we have it again, except for that was the close. All right, whatever. Oh, that was the open. Okay, silly Kevin. All right, so will there be follow through? All right, December went off the board, or on the board. And that's where we're at. Okay. All right, there was The futures are underneath. Yeah, the futures are underneath. So what we're looking for is something to either the futures are going to come running back up Sunday on the open to get back to cash levels, or it'll build and cash will just have to crater to match the futures on the arbitrage. But I'll look into that later on. Let me do this all things VIX real quick here. I think that was one of them. I had them lined up. Okay, so that's the S&P. Here's your VIX. Okay, I was hoping for 18 on Friday, but it didn't come about. I'm gonna guess that it'll hit. So 18, 19 should be the trigger for Sunday night, and then maybe 21 to 23 on Monday morning if it continues. We'll know more. I'll know more as the day goes by. But I'm looking at this as the start of something. If I was a floor guy or a money guy, I wouldn't put in any bids. I'd wait till after the election to buy, to tell you the truth. Like I said, 1937 stocks lost 55% in 4 months. So that would be 2,200. It'd be 1,100 on the S&P. So by the time Thanksgiving rolls around and the S&P is at 1,100, you're going to go, hey, Kevin told us on June 20th that this is what he was looking for. I also said 1,600, but whatever. You guys got the idea. I took the big old middle finger on the fist ride. But that's okay. You guys love me. VXO, this is the original formula for VIX. Bam! That one hit the top of the cloud. Amazing how that happens. It's almost like a computer was running the show here. But that's fine. Perfect. Okay, VXX, we got a turn, and a lot of people ran in there. So we have to figure out if Johnny, what they do is they open up the futures, whatever, lower. What was the number, 2050? Spider, crude oil. What am I looking for? If I only had a brain. Oops. ESZ, that'll work. Put it in, tell me it's a daily, it's a weekly, I want a daily. This is going to be a fat bar because everybody just jumped in today. So we go and we change this around to, we'll take this bar chart. We'll take a look at it again. All right, so this is what I'm playing on for the daily. 2110 because it closed right last 16. God, I hope that's right. I thought it was lower than that, like 14, but whatever. Okay, so I'll take 10 on the downside. So we'll say it's like whatever. What's this one down here? 2090 near 2080. Okay, so on the low end of things, 2080, 2090 should begin to find somebody that wants to cover their shorts from up above here. Because if you say, for example, you get to 2080, 2090, you're looking at your account going, damn, that's good. And all of a sudden it bounces 30 points up against you. You may hit the whole shit button. And then on the upper end, I was going to play it from, it's at 35 to 50. I was going to play it that. I think I said 30. So 30, 40 higher, 30, 40 lower is what I'll play this as. I better save that to remind myself. And then go back to the VIX thing real quick. First off, whoops, telltale. Oh, you monkeys, where the hell? Get off the dope, Kevin. All right. All right. So VXX, my first issue. Okay, first thing, it's unbalanced volume. There's nobody in it, nobody long until Friday rolls around, and then they all just pile in. Well, here they piled in before. You can see the bar underneath it. It went against them. It's like, okay, that was easy. This one might be a little more difficult here. Okay. Sure, it could pull back to 35, but the amount of volume is usually, that's what you want to see. What's the next one? So if this, all things being the same, I would expect VXX. Okay, I would be a buyer of VXX at 35, 36, and I would expect my targets to be 45 to 52. if this continues on. Like Monday, if Monday's not green, then I'd look for VXX on Tuesday around in the lower 50s. Better save one of those too. Because the deal is you have the rest of the world to catch on, because we sold all day long. And even when we got rid of Europe, we continued to sell all day long. All right, XIV, I pointed out a short at 37. If the bias is down, this is going to come down. This one came out in 11 before we marched down. So I really can't say buy it $4 or something, because this thing could, on our way to 1600 or 1100, if that's the plan, Stan, this thing is probably going to reverse a couple times, right? I haven't done the math. I'll allow somebody else to do it because it's been 4 seconds and I'm moving on to the next chart. All right, UVXY, same thing. They pile into it. It's a short-term futures. Okay, here back, same thing again. Whatever this is, what is that? 1862. All right, depending on, it's because it's like one of these things. All of a sudden you trade down to 2080 on the S&Ps. They come back to 2130. They actually are trading now above Friday's close. You may get the people chasing after it. You want to take it from them. All right, that's what I would on it. If come Monday morning, I use 24-hour data, because if you don't, and all of a sudden you're at 2080, and all of a sudden you open up at 2130, which is higher. You think, oh well, it might go down to here. Well, it already did. You're late. So I use 24-hour data. I use everything, every tick. Any pullback in VIX stuff I would buy. I think we're going to trade lower until end of November. Same thing here, TVIX, same thing. I prefer VXX because all this other stuff it's all slanted. Some of you are a little bit better at that when it comes to contango and backwardation. I just looked at it as it's a bias thing. I think we're going to go down, so you go after the VIX stuff. Here was once you'd had the Brexit thing and you came back through, that was, there you can get into I prefer the futures just because of, these VIX things can go to, obviously we've seen it go to zero a bunch of times, or, reverse splits. But the futures, they're not going to go, maybe they'll go to 1, 2, 3, 4, but it's tough on the futures. They, buy one at 16, buy one at 15, buy one at 14, buy one at 13, and then just, that's all you're doing. You don't have to put up the 2 cents on the dollar for the margin. You can put up 100%. You can put up 50%. But it's only been one day, bam, we hit the top here. Here, what's it at, 66 to 70? I'd be willing to short it there. Because we're going to have to see some sort of shift. It looks like this SUVY is headed down to 57, 50s within the, by Tuesday. It's kind of I'm looking just for, because you need to have the follow through. What I'm basically doing when I say Tuesday, as I'm waiting for everybody else that didn't get up at midnight on Thursday and bought a 2090 ES put for $7, or for 350, ta-da, so now I'm waiting for all of those people to that's what I'm doing. The price may be here, but it doesn't mean that people don't want to sell it lower. Same thing, any type of pullback, I think they're all going to be the same thing. Any weakness on Monday, on the open, well, I'll do a video or something. VXX, same things, like it on, or VXZ, excuse me. Is this a medium? Midterm. Okay. These are probably, some of you may want to do some spreads on this stuff where you end up doing where you buy the midterm and sell the short end kind of thing. The front end, I haven't done any spreads on it, but some of you may. So watch your, front end, mids, and long ends on the VIX. I got a secret, but I'll keep it to myself. Obviously, that's why it's a secret. Canadian ones too. Any type of bear flag, it's just going to head down lower. VIIX, same thing. Short term, any pullback buy, looks like it's going to head to 20. It's at 13. Same thing. These are just taking off. Yeah, the deal is we should get follow through selling because of the premium and discount, the discount on the futures and cash. Now, of course, I have to go calculate that real quick. Medium term, this one we wait. That one under 35, I'd probably ding, 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 catch a bell. You know, same thing. Oh, that one poked its head. This one's on a tear here. Short-term VIX. Okay, for you Canadians, you know, you get 26, 16, 13. That's pretty good. 20% to 100%. That'll work. VIXM midterm, same thing. That one's moved up. Yeah. See, okay, so they've already got them scared 3 to 6 months out. Okay, which is fine because eventually these will you know, here they got to 68 from 50. So what is that? 20%, 25%. So 20%, $9, 50, 52, 53 is what I'd shoot for right now, because this is a midterm. They're gonna need a little more scaredy cat in them. TVIZ 12 to 20, so an 80% move. So 80% times 9 is $7. So 15. We'll say 14 and a half, 15 on the TVIZ. What was that one again? Medium term. Oh, that's a 2-timer. All right. So, some of these are going to get out of whack here compared to the future. There's going to be some serious arbitrage things, but I'll wait down the road. Dynamic TVIZ. One more page here. Okay, here's India. India is a short. I better send these off to my buddies in India. Let me send this real quick. Twitter. Name contains VIX. VIX, Kev. So it's members. All right. Come on, you. And then I'm looking for BSE. Nifty. Oh, where's the Y? Nifty. And it's called the Sensex, right? Sensex. India. 1.3 billion people. Enjoy. Short. Run to the hills. Get on your cow. Whoops, Kevin, bad. Run to the hills, India, which is probably... Oh, they have a mountain there. Okay, or a few. There we go. We have to shake up the crowd worldwide. India VIX. What do we got? 13 to 16 is 20% to 19, 30, 40. We're going to catch them. I should do some stuff on India, but there's that. And then what do I have? Selects. All right. Here's just a candle glance of, oh, that one's off the charts. That one's just started. Cyclicals. Oh, that's a bad sign there. Now, let me do it this way. I got to just keep running through these real quick. Okay, so this one is classic. XLY, just a nice little pause before it rolled over. This one found support here. Technology, you'll want to go into the technology stuff on any harder pullbacks, because that's what the swing that we're in. You have to take, you know, this is like a 1987. This is like a, when else was it a short pullback? The 1937, this should be, what did I say? 23% to 55% in less than a 4-month period. You can see, there was a pause here for a few weeks and then it rolled over. This one stalled on the moving average for those who follow moving averages. This one, basically, this is, what do they call that? Breakaway gap. That one's taken off. Same thing. This one, energy, so we may pile into energy now instead of utilities. That's what I think we'll do. We'll lean towards the energy sector. ERY, ERX, those kind of things, long and short. Utilities are just cratering. They're going to run into a ton. They've already had their capital gains. Hey, look, if you want your little dividend thing, that's fine. But in 1, 2, 3 months, you've gone from 53 to 48. That's 5%. You've lost. Okay, you got a 6% yield, but you're losing 10% a quarter. Do the math. Healthcare. Someone's going to come out with a birth death index in healthcare, and the baby boomers. You got your death cross thing. Oh, the irony, Kevin, you're hilarious. The death cross in the healthcare index. Where is it? You don't have it on there. Death cross. Save it. How about this? Save as death cross. Death cross. Cool. Yeah. Okay. Where do you think it's going to go? 48. It's at 72. Yeah, it's going to be a sloppy winter. Ha! Or no, fall, autumn. All right. Funkin' Wagner. All right. You got to go back. All right. And XLF. Same thing. Financials. Better take a look. XLF. Yeah. What did I say down to here? Anything under 20, start gobbling it up. I guess you can go 21 and a half, 19 and a half, 17 and a half, 15 and a half. Play it that way. All the way down. Okay. And I think that's going to do it for now. I'm going to take a break. And then where's Ann? There's Ann. Yo. And I'll save this and I'll post it. It'll take a moment, and then I'll send a link to Sunday's deal. I think I'm going to do it between 2 and 6. How long have I been doing this one for? 2.5 hours. 2 and 6, and then if I want to, sure you do, Kev. The futures are open. All the cash people are going to go, OMG! Yeah, that'll teach them. So, Ann, you have yourself a wonderful afternoon. I'm going to go have breakfast. And then I see you tomorrow or during the day today. So rock and roll, take care. Hasta del fuego, and adios.